Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An immediate countering combined key reversal up and bullish engulfing pattern yesterday. Two interesting features about yesterday's action. First was how the open was still above the November 2002 high at 101.70. And the base of the action was for a second day on the broken but seemingly still effective lower time, currently 101.41 of the January to May 21 bearish Andrews pitchfork. As I've said before and repeat again now, I'd normally look to retire such a broken pitchfork. However, given the seeming current lack of initiative in going lower and what happened when the market pops up over the upper time, currently 108.82 back in February, and then popped back within the pitchfork again. Given that, hence the reason why I've decided to keep this bearish Andrews pitchfork still on the daily chart. Now looking below, we have the interesting 61.8% absolute Fibonacci line at 99.15. And the primary target X for the imperfect descending triangle at 99.05. Whilst the secondary harder to reach target X1 is down at 96.10. Off the bottom of my daily chart. Now, so far today, opening and moving down straight away, breaching once again down through the broken lower time, but hesitating around it. Cable, aka sterling against the US dollar. A combined immediate countering bullish engulfing pattern and a possible hammer today. Or let me rephrase that, a possible hammer yesterday. However, the market still remains in between the middle time below, currently 116.91, and the upper time above, currently 120.31 of the late April to late May bearish shift pitchfork. Now, a little above, we have parallel to the upper time the short moving average, currently at 119.78, and an unlikely but seemingly effective resistance. And then we have the May low at 120.73. Below the market, we have some light support between 118 to 114.5 at dates from March 2020. Then the harder to reach target X2 in the 115.30 area for the recent diamond pattern before the October 2016 flash crash low at 114.48. So far today, a slightly higher open, move from the and then a move from the open down, but with a reversion back down, a slightly move higher, then a reversion back down. Those still within yesterday's range, and then a pull back up again at the moment. The market continues to show a lack of desire to press the light support between 118 to 114.5 just yet. Euro sterling, a third countering bullish harami yesterday, with a really long tongue on top that stretched up all the way to the extension of the upper trend line, currently 85.89. The very large December 2021 to May 2022 diamond pattern before coming off and closing on the declining short moving average, currently at 85.17. Meanwhile, below we still have the off-tested three support levels from the last few weeks. They are the rising medium moving average, currently at 84.64, the flatlining long moving average, currently 84.42, and the September 21 to date broken downtrend, currently 84.24. They're continuing to separate out, and thus losing their combined potency. However, the broken downtrend is very interesting, as it also is the upper trend line of the very large falling wedge pattern, and that's currently 84.24. Between 84.24 and 18.96. This pattern originated many months ago and is still in operation, but it has fallen into the shadows a little with the rising prominence of some of the more recent diamond patterns. It was also a second consecutive clear close over the recent resistance of the April 21 low at 84.70. Going back to the falling wedge pattern once more, the potential target X4 for this pattern is quite ambitious, up in the 88.65 area off the top of my daily chart, and a really, really big ask of the market. Closer in, we have target X1 in the 87.65 area. This is for the harder to reach secondary target for the recent small lopsided diamond pattern, plus target X3 in the 88 even area. And that's the harder to reach secondary target for the recent extended diamond pattern. On top of all this, we have targets for the December 21 to May 22 reverse head and shoulders pattern. A primary target X5 for this reverse head and shoulders pattern would be in the 87.75 area. And a harder to reach secondary target X6 would be in the 88.65 area. Now targets X4 and X6 are currently just off the top of the daily chart, or my daily chart. Now, all these targets on the upside have been under a threat last week and the week before, as the market dropped lower, specifically dropping below yet another pattern. Now, I have to say, this daily chart seems to be absolutely full of patterns at the moment. Anyway, the last and latest pattern is a late March to mid-April based large ascending wedge pattern, currently 88.13 to 86.44. And unlike the others, it is a contrary one, a bearish pattern. This had a primary target in the 84.35 area and a harder to reach, seemingly much harder to reach target X7 in the 81.15 area. Now, right off the bottom, my daily chart. The reason I haven't marked the primary target is that it has already been achieved. Thus, if we do carry on seeing a remission back up, then one could say the market has indeed reached the primary bearish target below and then been reinvigorated enough that we have, with the bullish incentive, enough to revert and try higher. This is an interesting concept, don't you think? Now, so far today, a move down to yesterday's lows, but really not much that until just now, as we're starting to move down and we're looking at the April 21 low at the moment, and that's in nearby 84.70. That would probably be the next support, just ahead of the medium moving average. US dollar against Indian rupee. A third countering key reversal down and bearish engulfing pattern yesterday. The market pierced but did not close below the old 100% projected Fibonacci line at 79.81. It was also another pullback from the all-time high made last week. We still have the harder to reach secondary target X1 up above in the 80.43 area. This is for the recent bullish measured move higher. Overall, the market is still in between the overhead middle time, currently at 80.54, and the lower time, currently at 79.08 of the January to early April bearish Andrews pitchfork. Bullish Andrews pitchfork, I should say. This bullish pitchfork has been running the bullish angle of attack here so very successfully since the end of the first quarter. Now, so far today, well, nothing much. A little higher, but looking like an indecisive doji cross right now, and still within yesterday's main body range. US dollar against the Brazilian real. A strong bullish closing white Maribosa yesterday with the highest close since January, and a suitable follow-on higher from the previous session's hanging man pattern. It's also the first clear close this week over the middle time, currently at 546.09, of the April to late June bullish Andrews pitchfork. Now, looking at the larger picture, I note the ugly double bottom. Yes, that is what it is called, an ugly double bottom, formed over this year with a potential topside primary target X in the 68.85 area and a harder reach target X1 off the top of my daily chart in the 584 even area. In the meantime, keep an eye out see how the market continues or not utilizing the bullish Andrews pitchfork as its principal bullish angle of attack. US dollar against the Mexican peso. A third bullish white soldier yesterday and a move up to touch the middle time overhead, currently at 20.71.44, with a late March to late June bullish shift pitchfork before coming back down to rest and close on the combination of the neckline, currently 20.73.35, of the September 21 to February 22 head and shoulders top, currently 20.61.05, and the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.60.62. This continuing move higher threatens the neckline above, currently 20.73.85, of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line of the November 21 to March 22 move at 2078.02. Overall, the market is still, if only just, in between the middle time overhead, currently at 2071.14, and the lower time below, currently at 2019.99 of the late March to late June bullish shift pitchfork. Now, so far today, well, a further attempt higher, running up to the middle time again as it crosses over with the neckline of the late March to late June bullish shift pitchfork. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investors International Limited. And here comes the final bit.